Hello guys, welcome back to the channel. I hope you are doing well, and I hope your trading is going well. We have been in consolidations lately, but um, as you know, we are also getting ready for the NFP, which is coming on the first Friday of February. Yeah, but before I go any further, let me remind you that I'm not a financial advisor, guys. I'm not permitted to give you any financial advice. So let's dive into it. So today I'm going to make a review on ADUSD. I don't trade this pair. Um, However, I've had my followers trade it, and they had some setups on this pair, and now they have received numerous requests to make a review on the setups they had. I think the setup was on the 25th and the second was on the 26th, which was yesterday. But I'm going to start the review from the 24th. Okay, so yeah, let me start from the 24th. What I'm seeing from the 24th, I want you to watch closely because it's in such reviews that I actually review some important factors of trading that some of you need at the moment. So from the 24th, the first thing I'm seeing is I'm seeing a grab of liquidity. I'm seeing, price running on these buy stops, and I'm seeing price breaking this high. By the way, these lines are day dividers, like 24, 23rd, 24th, and then the 25th, right? So you can see price going below this swing low and price reversing. That means we've run on sell stops and then price taking out this high. This is not a grab of liquidity because we have a huge candle, a huge move above this swing high. So this becomes what is that? This becomes a break of market structure. So now, if I start my fibs from the top high, this swing high to the low, we see price came into the equilibrium. I like calling this area as the golden zone for me because I use two fib levels instead of 50%. Okay, so price came in here the following day, actually on the 24th, and then price went up. So if you would go on the lower time frame, I think you could see maybe an entry. Let's check that. Let's see if we have any on the 5 minutes. There is none. And let's see on the 2 minutes. Let's see if we can find anything on the 2 minutes. Well, on the 2 minutes we see price going below this swing low, price going up, but we do not see a push back into this area. So I'll switch back to M15. But what I'm seeing again is, let me check M30. No, M15 is okay. So price goes up after going through this swing low, then a break in structure here. Okay, now we could have seen a retest in here to buy, but because it was midnight and the day was closing, we didn't see it happening. right? We didn't see happening, but what we see is price almost touching this breaker. This whole move becomes a breaker, and we see price almost touching it, but there was no touch actually. So we don't have a trade. We do not have a trade. So now let me move on the 25th, because I just did 23rd, 24th, and now on the 25th. Now let me remove the 26th. Okay, so now we have 25th here, and we have previous day's high here. I'll mark it as PDH, and then we have previous day's low here, PDL, right? Now what I see is price taking this low, so that becomes our Judas swing, a grab of liquidity, and price breaking this high. This whole move from here to here is a breaking structure, so a BMS, and then we see a fair value gap on H1. This is a fair value gap. All right. Now, price went through previous day's low during the Asian session. So that is outside the Q zone. That means even if you were to be up, you are not sleeping at this hour, and price goes through previous day's high. And if we see a reversal pattern here, it is not to be traded because we are outside our Q zones. According to my time, this is 2 a.m. in the morning. I'm still sleeping. I don't know in your time zone, but whatever it is in your time zone, we are outside the Q zone. So now my followers, this is where they looked for a reversal, a trade. Okay, right here. So let's focus here. Now what we see is price push up, down, up. We make something like a head and shoulders, for those who know the pattern of head and shoulders, and then price. A head and shoulders, actually it's almost equal to a smart money reversal. The difference is that smart money reversal, we need this low here. We need let me use this. The difference is with smart money reversal, we need this up, a break, and then back to go down. While this one, price goes up, down, up, down, then up, fails to take out this swing high, and then price goes down. Right? So now our focus is right here. Now if I go on Twitter, let me check some. There's this I don't know how to hide their identity, their identity. I'm so sorry guys, but I think there is nothing so private about this, I think. So yeah, this fellow entered right here, so that means he entered, let me check again here. Okay, so his entry to sell was here, okay. He's not the only one. There are many others who entered on this trade. Now, later on, you will see my tweet, my reply actually here, and I said, I guess you all closed. And the reason I said is, um, let me say this. This trade that you had here was not a complete setup, because as you know, the complete setup, you need to have the narrative behind it. Why? Because this is a confirmation entry, but what is it confirming? I want you to ask yourself that question. If you base your entry on this setup here, why was it formed? That is the narrative that you were missing from this trade. Because if price has to create a market maker buy or sell model or a mitigation block, there has to be a story behind it. There has to be a reason why price is behaving that way. So before market created this pattern to sell, what was the cause of it? Is there anything you see that price was reacting to for price to create this pattern? I do not know if you understand what I mean. The narrative behind the setup. Now I'll go over Euro USD, because this is AUD USD, which is in correlation to Euro USD. So if I show you Euro USD on the 25th, and I will remove 26th here. This is why I told you to, I said, I hope you've all closed. What do you see? We see on the 24th, price grabbing liquidity below here. Price ran through these sell stops. Then price came and broke structure because we have a close above on the 25th. Okay. Then price sold. But because the prior day we had a market maker buy model, I expect price to fail in the equilibrium level. So let me use this one. From the top to the low. So from this top to this low, you see, price failed in the equilibrium, of which I personally call the golden zone, because I did not use one fib level. I used two, which you can see here. So if I move to M15, this is the same trade you saw me posting. So my entry was here. After this rejection, my stop loss was here, and my target was this swing high, like this, and it was hit. So when I saw this happening, immediately I switched to, first of all, let me see if I posted this. I should have posted it. Let me check. I should have posted it. Oh, here you go. Here you go. This is the entry, and I was targeting this swing high. So now, when I saw this happening on Euro USD, I knew the ICT SMT was happening. And that's why I posted that I hope you guys you've crossed, because I understood that if price is above previous day's high and price had this move above previous day's high, it means the previous day's high is likely not to be broken. It will stand and act as support for price. And then above it, we have this fair value gap. It is so obvious, even a newbie can tell that this is a fair value gap. Price comes into it, and then I was like, guys, I hope you've closed, because I knew price was going to come back to take out this high. All right. Right here. So now, the brother who entered here, your entry is okay, but the question still stands. What was the narrative of all this? What did you see price reacting to for you to trust this pattern here? Why did you trust it? If I tell you why I trusted this Euro USD, switch to H1. 1. Price grabs liquidity, price breaks structure. On the higher time frame, H1 is quite higher time frame. Price comes back into this order block, H1 order block, right here, okay, which took out liquidity. Now price has come back into equilibrium, right? And M15, now I go to look for the confirmation after having the narrative. There we go. Price comes here, makes a low. We make a high right here. We make another high. We come to retest this order block. Price breaks up. We have a retest on this candle. My entry was right here. So can you see it's a series of confirmation? It's not basically going to look, okay, we have this OT, optimal trade entry. Boom, I enter. You need to have a series of confirmation from the higher time frame to the lower time frame. Now let's go back to AUD/USD. So I hope this makes sense. And another thing that I wanted to mention, your entry, brother, and actually not just you and everybody else, was right here. But the best entry should have been up here. Why? Shifting structure and mitigation block, entry, and boom. 40 pips. Okay, so I'm done here. Let me check. Let me review. Let me look at the 26th. So I'm going to remove this other stuff. So now the 26th, we have the previous day's high right here. We have the previous day's low here. Previous day's low. Now, and then I'll remove today. Right. So now we see London opened on this candle. This is where London opened. And before it opened, we see Asia went above previous day's high. Let me switch to M15. I want you to pay attention. Pay attention. This is where London opens. Right here. Price had had grabbed liquidity above previous days high. All right, so then London opens, your entry here to sell, your stop loss would be above this week. So that means even if you had a drawdown but you are not taken out, and then you have 34 pips. Once price gives you 34 pips, you move your stop loss from here and lock in. Now that price has failed to go lower, price comes, takes you out at break even, you lost nothing. There's no need to cry, you have lost nothing. Now price has gone above these swing highs. That means this previous day's high has been invalidated. This market maker sell model has been invalidated. Our new pool of liquidity shifts from previous day's high to these swing lows. So this PDH, previous day's high, is no longer of value to me. It has been invalidated. This is what I always share with you guys if you watch my videos, because I see so many of you guys, most of you watch the videos and you don't complete the video. You just watch for a few minutes and then you're done. And then some of you are watching but do not subscribe. I don't need subscribers. I don't need, because I don't need you to pay me. I don't need to make money on ads. So it's up to you guys. It's completely up to you. So now if I switch to M5, we have this order block. Now this is a New York session. New York session. All this rubbish, this nonsense here happened in London. But remember, you got 30 pips. Actually, this could be enough for the day. 30 pips. Think of it. On 10 standard lot size, that's 3,000. 20, that's 6,000. But if you were aiming for more, then you would just lock in to protect your capital. So now we are attempting a second entry. Let me move to M3, M2. Perfect. Now in that order block, on M5, we see a fair value gap on M2. Sorry. And then we also have the market maker sell model, or the 2022 ICT model. When we have this and come on, and this, right? And then your entry would be here. I don't trade this pair, but I'm doing this for you guys. And then your target would be the next drawn liquidity. Which one is that? These lows. This is a drawn liquidity. This is a drawn liquidity. But this would be the first drawn liquidity. The second drawn liquidity would be here. But this would be enough. So let's put this all the way down into here. That is 72 pips. Can you see that? I mean, I don't think if this is making a value to you guys, but this is all you need. You need to know how to invalidate setups, to identify invalidated setups, and how to exercise patience. So now, what is the narrative behind this trade? this one compared to the other one the brother took. So this one, if you switch to H1, again, what did we take? Previous day's high. Did we get a setup in London? Yes. However, it went 30 pips and then came back and took us out at break even. Then price went up, took all the liquidity from these highs, both Asian high and London high, taken out, and now we have a market maker sell model on the 2 minutes time frame. Our entry and our target is this low, and you are done. So I hope this video has made value to you guys, and you are learning um, something of value to you that you can utilize in your trading system. You just need to pick one system, guys. You don't need to trade everything. Pick one model that you can stick to, that you can easily understand. So until next time, guys, stay safe.